Good day, everyone. I'm Brian Rezny, president of Rezny Wealth Management, and welcome to this special update on the investment markets. As we kick off September 2025, there's a lot of chatter about investor caution. After all, September has historically been one of the toughest months for stocks. But today I want to share some optimistic insights that could turn that narrative around. Drawing from expert analysis like that of Tom Lee at Fundstrat, and backed by historical data, I believe we might see positive returns this month, especially with the Federal Reserve poised to cut rates. Let's start with the basics. Since 1950, September has only been positive about 47% of the time, and we've seen volatility creep up recently, with the VIX rising from around 14 to 17. September and October are notoriously challenging. But here's the game changer. The Fed has been on hold for much of the year and is now set to cut rates in September. This scenario is incredibly rare. It's only happened twice in the last 50 years, in 1998 and 2024. In both cases, the S&P 500 delivered positive performance, averaging a 3.3% gain for the month. Diving deeper into history, in September 1998, the Fed cut rates by 25 basis points amid the long-term capital management crisis and global financial turmoil. The market responded positively. The S&P 500 rallied about 6% that month and went on to gain 25% over the following year. Fast forward to September 2024, when the Fed made a bolder 50 basis point cut to ease monetary policy after a period of high rates. Despite initial volatility, stocks dipped slightly on the announcement day. The S&P ended the month up around 2%, and over the next 12 months it climbed nearly 20%, fueled by economic recovery and tech sector strength. This isn't just coincidence. Broader history shows that Fed rate reductions often boost the stock market, particularly when they're not triggered by a deep recession. For instance, in June 1995, the Fed cut rates during an expansionary phase, and the S&P surged 23% in the year after. In 2019, a series of cuts amid trade tensions led to a 15% gain in the S&P over the following 12 months. Looking at 11 easing cycles since 1970, the S&P 500 has delivered positive returns in the 12 months post-cut, in most cases, averaging around 10 to 15% when the economy was stable. Even in the early 2000s, after the dot-com bust, cuts helped stabilize markets and pave the way for recovery. Why does this matter? Lower rates reduce borrowing costs for companies, stimulate consumer spending, and make stocks more attractive compared to bonds. We've never seen a bull market peak when manufacturing indicators like the ISM are below 50. And right now, ISM manufacturing has been sub 50 for 31 straight months. That suggests the bull run has legs despite some softness. Keep an eye on this week's key data: ISM reports, tariff updates, and the jobs report. A soft landing could keep the momentum going. For client portfolios, we have been focusing on high-growth areas that thrive in lower-rate environments. Artificial intelligence poised for gains as innovation accelerates. And don't overlook the Magnificent Seven stocks. They're the backbone of the market. Even with NVIDIA's recent dips due to competition from players like Alibaba, remember, NVIDIA remains the go-to for AI chips. There's still only one NVIDIA dominating that space. In summary, while September has its risks, remember volatility is normal, and I would not rule out a 5% or 10% correction this year before we have the opportunity for new highs. Even in front of the Fed's rate cut, volatility to the downside can happen, but could be the catalyst for more upside. While there are no guarantees to the future, history is on our side, with multiple examples of positive market reactions to similar moves. At Rezny Wealth Management, we're here to navigate the markets and keep our clients well informed. As always, if you have any questions about your portfolio, please reach out to the firm. We are always here to help. Make sure you forward this email to your friends and family so they can get the same high-quality education you receive from Rezny Wealth Management. Have a very profitable day.